Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish impulsive scenario where we're looking for a 5-wave move to the downside for much lower prices to come. In this particular scenario, wave 3 might then already be in, working on the green 4 for then eventually a green 5 to the downside. And the reason that wave 3 increases in probabilities of being in already is because of the time of this sideways structure over here. So if we look at the subdegree count of a wave 3, then preferably you have then a 1, 2, 3, 4 and a wave 5 where you make another low and you make another low on lower volume as well over here on the chart, because now this pivot at the low has the highest amount of volume. So this is the preferred scenario. However, now that price over here starts ranging, and the weekend usually is a ranging environment, if it continues ranging till Monday, then this potential wave 4 is going to be 7 times longer than the wave 2 over here, which is not really what you want to see, increasing the probabilities that a move already ended at this pivot over here. That is then the reason why wave 3 is in, and in this bearish scenario we are looking for a higher degree, wave 4. So we go up in degree. It's not a sub-degree of wave 3 anymore in a 1, 2, 3, 4, 5. And this is the end of wave 3. Now wave 3 is in and we're looking at a bigger, higher time frame wave 4, which can then be comparable to this wave 2 over here. So it takes more time. Now in this scenario, wave 3 at least did not hit the 1.618, which usually is a common target for wave 3 as it tends to be the highest impulsive, highest volume wave in an impulsive structure, but it is also not the shortest, which is a minimum requirement. If you take a trend-based fib from the low, from the high to the low of 1 to the high of wave 2, you can see that the 1-to-1 here has been passed. So wave 3 is longer than wave 1 at least, which is a minimum requirement. Now the most common targets for a wave 4 are the 382 and the 05. This area over here leads us to a little bit of a problem, because then we're going to have overlap with the low of wave 1 over here, and that's not what you want to see in an impulsive structure 1, 2, 3, 4, 5. You don't want overlap between the low of 1 and the high of wave 4. So this is something that we have to monitor and would be an invalidation, or we have to move the low of wave 1 to the left over here. And then it is a little bit higher, and then the 382 can be potentially be hit. But this all depends as well, and that's what I am looking for on the structures we are forming locally, that if price moves up to the 382, how does it do so, right? Now in the bullish scenario, we are looking for either a WXY or an ABC, where in the WXY we could be finished, as well as in an ABC. This could be the end as well, or potentially another low, but probabilities again are getting lower for price making another low and still being part of then a wave C because of the length in time. So in an ABC, looking for a 535 here, we're then looking for price to hit this area. Most common target area for a wave C, well, has been hit. Price ranging over here. The 1.618 is a less common target, but a target nonetheless for a wave C. But if we look again at the subdegree count of this structure, and let me actually get it in detail now. So this is the same for a potential 3 as a C. In this particular scenario, looking at the subdegree like a 1, 2, 3, 4, and then you actually want to see a wave 5 to the downside. But of course in the weekend, usually price is ranging in the weekend, and this of course would be quite a move to the downside for the weekend, for where it is now in seeing an impulse to the downside here for a wave 5. So it will be interesting to see what this weekend does. Of course, we had a push as well because of some news over here. So they already started with some volatility. So maybe that continues as well, right? But in this scenario, you actually really want this to be the high of your wave 4, and you now want to see an impulse to the downside in a wave 5. If we now get an impulse to the downside in a wave 5, then we still have the potential of putting wave 3 over here. So wave 3 moves then, the green wave 3 moves to the right in the more bearish scenario, but also in the ABC scenario, wave C can then move to the right as well. This is the end of wave 5, 1, 2, 3, 4, 5, ending wave C for then a potential continuation to the upside, right? So this is the move in a little bit more detail, where preferably 4 is finished. We hit the targets we spoke about, the daily naked point of control. We filled the gap as well. So that is all very nice, very good. And then we want to see an impulse to the downside. Now in this particular scenario, I also put the WXY on the chart for potentially a double zigzag WXY, and then here an ABC as well. And then in Y, another ABC. Now, double zigzags are not that common, so that's something that at least we have to keep in mind, right? So let's wait and see how this is going to develop more locally throughout the weekend, because if this is going to range, that's when probabilities change. Now, the more local bearish scenario for a move to the downside was this scenario over here, right? Where we were looking for a three-wave structure for then continuation to the downside. And the 886 can give a hint, because if this is the low and we are looking for a bigger move to the upside, then you don't really want to see the 886 being hit. The 886 is a rare target for a wave 2 and a common target for a wave B or a wave X, meaning that the probabilities are higher that this move over here is part of a corrective structure, that this move then up is either wave Y or a wave C, which then increases probabilities that price eventually takes the double bottom, right? So that 886 is very, very important. Also, price over here reached the target area very nicely, well respected, hit the daily naked point of control we were talking about, also filled the gap, had an immediate move towards the downside. But now the question is, does it continue, or are we just going to continue ranging for the rest of the weekend, right? Now, in the more bullish scenario, where this is the low, we are looking at a wave 1 to the upside, which has to be some sort of an expanding structure, which is rare, but not impossible. And then we are looking for a WXY in wave 2. So then this is the low of a wave X, but your wave 2 ended on the golden pocket, which is a common target for a wave 2 taken from the low to the high of wave 1. But still, seeing the 886 tagged is very rare in a wave 2 in general, but in this case it's then a wave 1. And then you have a WXY in a wave 2, and then we're looking for the beginning of a bigger wave 3 to the upside, where this is then your wave 1, your wave 2, and you want to see continuation to the upside. Now, if we look at this being a wave 1 over here, then it has to be something like 1, 2, 3, very, very, very sharp 4, and eventually a wave 5. So for this bullish scenario, you're not allowed to go below this low over here. The invalidation is 26.6k in the bullish scenario. The moment you take these lows, that's the moment you also then invalidate this particular scenario. Now, if we look at the CVD divergences, it's mixed over here. Bearish CVD, bullish CVD already played out, but the bearish CVD in such a volatile weekend after yesterday, not sure if that's very trustworthy as well, looking at how price here moved down, but at least it's something to keep in mind. But also after the bounce at the lows, higher low in price, lower low in blue, bullish CVD divergence, which of course is interesting. But now we have bearish CVD divergences here, so there's some market or some absorption of market longs, and the target for the bearish CVD would be taking this low over here, which is sitting at 26.7k. So if we then finally look at the probabilities of the different scenarios, then if we go to the micro scenarios, meaning we have either the impulsive scenario or the ABC scenario, then currently, based on how price is moving to the downside over here, probabilities are increasing for price to take this high eventually, either move down another time to create a fifth and the end of C for then a move to the upside, or that this is your low and we are moving towards the upside. But if I look more locally, then looking at what Elliott Waves is showing us over here, the highest probability scenario is that price would still take the double bottom over here and make another low. Ending over here on the highest amount of volume is not something you see very often. That is a characteristic of potentially a double zigzag, but this over here is not something you see too often. Can happen in a wave C as well. But then hitting the 886 as well, instead of just seeing a proper impulsive move up, hitting the 886 is not really something you want to see as well. So probabilities from an Elliott Wave point of view at the moment are higher to then still take the double bottom here. But overall, the probabilities are increasing for price to move to the upside, either from here up or make another low and then up. And that has to do with the impulsivity that is a little bit lacking in a bigger impulsive scenario to the downside, where if this is part of a bigger wave 3, of course you want actually wave 3 to be very strong. You want to see volume increasing consistently. You don't like to see too many long sideways ranges. You like to see this stuff. right? Strong impulsive structures, big candles to the downside, but at the moment that's not really what we get. So let's wait and see if we get an impulsive weekend or not. At the moment we do have bearish CVD divergences, and of course I will update you at 1 p.m. Central European time as well. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.